simple concept about reconciliations. You have to find out difference between the two different data. That's straightforward. If you are doing reconciliations of any data, take the example of anything. If you are going to do the reconciliations for any two data, if you're comparing the two different data for performing the reconciliations and to ensuring to match the closing balances, the both books should be same. And if it's not, what's the difference between that? Sometimes when you're doing the reconciliations, might be you're able to get the some external data from your different source of informations, different entities data, the books of records as per their, our books as per their records, and in our books their record in from our books. If you see here is that it's your bank recon, you have the two different statement. One, that's your books of account as per your own, your statement of bank as a bank account as bank balance as per your record, or bank statement from our books of account. And second, we are going to ask to provide bank statement from bank. You have this two statement. One from your books of account, second from bank. That's a bank statement. And you have to do the reconciliations between these two to ensure that balance is going to match. How you're going to do that? In your bank statement, in your books of account, if you have the uh, debit transactions, that's going to be there with the bank statement, credit transactions. If you have the credit, that's a debit in the bank. Your debit, you are going to match with the credit. Your credit, you are going to match with the bank's debit. When you are doing any payment entry, you are going to debit to bank and credit to, you are going to debit to respective person to whom you are doing the payment and credit to your bank. So whatever the payment is there, that's a credit. Opposite to the bank, it's a debit when we are debiting to the bank in a bank statement. So bank what's going to do is that bank is doing debit the bank account and credit it's paying to whom we asked. So our credit is bank's debit and our debit, when we receiving the money, we are going to do that bank account debit to the amount is received from our customer or whoever is sending that amount, then debit to our account and credit to that particular person. So bank account is going to debit here. The same that's going to be credit in the bank. So our debit, we have to match with the credit. Our credit, we have to match with the debit. When we have the two different statement for perform the reconciliations, if you're going to do the reconciliations with the vendor statement, that's also is going to be the same. When the vendor statement is there in the vendor statement, if you see towards here is that in the vendor statements as well. So that's going to be two statement. If you are going to do with the vendor statement, you have the two vendor reconciliations. You have those two statement. One, vendor's ledger statement as per your books of account, and same the vendor statement from from vendor. So you have those two statement here as well. One, the vendor statement as per our books of account, and the another one, we ask our statement from the vendors. And then we have to do the reconciliations here as well. Same, it's a debit credit. If it's a debit, that's a credit. If it's credit, we have to match with the debit. Somewhere that's going to be how the opening balance is as well. So the opening balance is going to be there. Our opening balance versus his opening balance. If it's from the opening balance is there, then our debit, our credit, plus minus of this is our closing balance. Same, our opening balance, we have to match with the our vendor's opening balance. Our debit versus vendor credit, our credit versus vendor debit, and closing balance, closing balance. So what we have to do is here is that whatever transaction is happen between these two, we have to match. As like in the reconciliations in B and D columns, what we have plotted with the amount, the same. If in our one books, if it's going to be X and if this is going to be the Y, and if in X book we are mentioning that 15,000 is opening, 15,000 is opening, that's a matching. When we are saying that we received the amount in a two transactions, that's 10,500. So in his books also we need to see either that 10,500 is there or not. But we are saying 10,500 and in his books it's showing 11,000. It means that here we have the difference. So what we need to do is that whatever we have the entries in our books, we have to match with that another books of account. If you are seeing that in a bank reconciliations, you have the debit, you have the payment, what you have done in credit, in debit, that's a receipt. Now, your payment, whatever you have entered in the books of account, that you need to match with the bank. Either same is recorded in the banks or not, or any additional payment is there in the bank. If some amount is received in the bank, and in your books also, there are few line items as a receipt, but either that's matching with the bank or not. If it's not, then there is some discrepancies. In vendor statement, you're mentioning that you have the some 10 invoices you booked as an purchase. 10 invoices you booked as an purchase. But either that sales is there in the our vendor's books of account or not. Or if in a vendor's books of account, instead of 10, 15 invoices is there, but in our books, we have just recorded 10. Where is that 5 invoices? Sometimes we have done the payment. We done the payment, but that's not recorded by our vendor. Then that's also is going to be the open items in the reconciliations. So the reconciliation, it means we have to find out the difference between the two statement to ensure that whatever transactions has been recorded in our statement, that exactly need to be there in the another statement. And if there is any discrepancy, if there are any discrepancies, then we have to find out the reasons for that. And we need to see which transactions are there which we haven't recorded or that's not reflecting in his books of account. And we have to find out the reasons for that. We have to ask for the respective persons. Hey, look, we have booked the 10 invoices for the purchase. As per your books of account, it's a 12. So these two specific invoices we haven't recorded in our books of account since we haven't received that invoices. Can you just provide that? If it's provided the services, can you just reshare that invoices? Certain payments we released, but he has not recorded in the books of account. And we have to inform him the same thing. Boss, we have done the payment, but that's not reflecting in your books of account. Can you please check? These are all the transaction details. Then he is going to check in his books of account. That whatever the differences we highlighted, that's going to be says that reconciliation atom, open recon atom. Once we highlighted, some would need to take the actions on that to ensure that open recon items is going to resolved. Preparing reconciliation is one thing. Once we prepare the reconciliations to get the closure of open recon item, that's another things. Till the times we don't have the closure of our open items, then that's not meaningful of the reconciliations. If you have plotted the reconciliations, you identified the open items, but that open items, no one is acted on that, then that still that open items is going to be remain the same as it is in the books of account. So getting the closure of that, that's also is important. So whenever you have the two different books of account, whenever you have the two different statement, then you can perform the reconciliation. So for any reconciliations, you need two different records. Then only you are going to perform the reconciliations. If you consider the bank reconciliations, you have your own books of account and your another bank statement. If you're going to consider vendor reconciliations, you have vendor statement as per your books of account and your statement from the vendor. So you have the two statement for reconciliations. If you're going to treat as a customer reconciliations, you have your customer statement from your books of account and customer statement from the customers, our statement from the customers. Then only you're going to perform the reconciliation. There are certain reconciliations is part of your balance sheet reconciliations. Bank, vendor, customer, that's going to be routine reconciliations. But if you're looking towards the prepaid expense reconciliations, if you're discussing towards the your fixed asset register FA reconciliation, if you're discussing towards the your unbilled revenue reconciliations, for that you have to do the reconciliations again. Here also the two details is going to be the required. One, how that prepaid expense balance is accumulated in your balance sheet. How that prepaid expense balance is accumulated in your balance sheet. You are able to get that from your GL dump. If you're going into the systems and pull the GL dump for the prepaid expenses, you are able to know that how that amount is arrived. That's a closing balance. Second, you have the one is ledger details from your systems, your books of account. Similarly, the second record is going to be used. That's a prepaid expense schedule. What you have maintained in the Excels, which have all the details. How that prepaid expenses is arrived from the which vendor, what's the duration for that, then how much is the expense off within the first 1 month, 2 month, 3 month, what's the closing balance as on date as per your prepaid expense schedules. Then you need to go and check with that schedules versus your GL dump and to see which transactions is missing in your GL or something is there in the GL and not in your prepaid expense schedules. Here as well, we are doing the reconciliations. But here, it's not like that your vendor reconciliations, debit versus credit and credit versus debit, is going to the matching reconciliation. Says that what entry you entered in the GL either that's as per the prepaid expense schedules or not. You're just reinsuring what you have done and matching with your prepaid expense schedules. If expense off from the prepaid expenses for that particular October, if it's 60,000 is there, and if you have entered something different. So that's going to be the, if the prepaid expenses is 60,000, we have to expense off for October. And if you have done the 65,000, on what basis we have done that? What's the reason for that? What's the backup for that? So we need to check all these things and to see how and why. That's important. So that's we need to do the reconciliations for that. If any expenses is booked in the prepaid expenses in the books of account, we reclassified something from the P&L to balance sheets when we uh, have been doing the P&L analysis, observe certain expenses pertaining to the prepaid and which we haven't transferred towards the prepaid expenses. And that's observed at last moment. So we transfer from the expenses to the balance sheet as in prepaid expenses. But that we haven't booked in our prepaid expense schedules. Booked in the sense we haven't captured that details, recorded that details, added that details in the prepaid expense schedules. So your prepaid expense balance is different as per the GL and as per the your schedules. So when you are going to see towards the GL dump, you have the backup details. So that's reason it's important to say is that for each and every transactions, what you are doing in the systems is essential to have a backup details for that. Or you have to add something in the narrations which going to give the clarity to someone why you entered that entry in the books of account. So someone is able to see from that, okay, so he has done the prepaid expenses transfer from P&L to balance sheet, and this is the invoice is attached for this entry. And based on this, so we have to add that in the prepaid expense schedules. Okay. So he is going to add that in the prepaid expense schedules. Then the backup details, what's there as a prepaid expense amount in the balance sheet, that same is going to match with prepaid expense schedules in your Excel. That's your balance sheet reconciliations, where you're capturing the details, preparing the schedules, then how you're going to do the reconciliations. So the reconciliation concept itself is uh, not that much complicated. Only the complication is going to increase due to number of transactions. If we don't have any common parameters between the two records to match the transactions. If you're going to do the vendor reconciliations, you have the invoice number for the purchase transactions. That invoice number is unique in both books of account. Your purchases, you are going to match with his sales. But the same how you're going to deal with the payment. So as on date, earlier the payment used to process through the checks. So that's very easy. The unique number is there. But now it's online transfer, UPI transfer, Google Pay transfer, Phone Pay transfer. So which reference numbers you are using, which reference number he is using, that's different. So it's going to create a problem for that. But still we have to perform the reconciliations. And that's the reason it's going to be a little bit complicated. For prepaid expenses, accrued expenses, unbilled revenue, that's easy. If at last, if someone done the some entry in the systems, but there is no any backup for that, and as per your books of account, as per your schedules, you have everything is with us. That's backup. At the last, what we are going to do is that the person who enter that entry in the systems, we are going to ask on what basis you entered this entry. If he is also not able to provide the justification, then we have to review that books of account for that period and to see why he entered that entry in the books of account. and to take a call for that. So the reconciliation, it means we have to just ensure that two records are on a same line. And if it's not, to check what's the difference between that. And we have to do the analysis. We have to do the reconciliations for that. So our transactions, we have to match with the another books of account, and to ensure whatever we have recorded, that's there in the another books. And whatever recorded in the another books, that's the same we have in our books of account. And if it's not, we have to find out the reasons for that. And we have to add that in our reconciliations and to say, yes, these are all the open line items in the reconciliations on which we have to take the actions. If any invoices related to customers as well, we have done the sales, but that invoices is not recorded by our customers. So we are going to say that invoices raised on the customers, but it's not recorded in the customer's book. We have to share the invoices to customer for further check. If we are saying that our books of account balance from the receivables is going to be 2 lakh is going to be our receivables from our customer. And if customer is saying only 1,75,000 is payable, and we identified some 25,000 rupees invoice is not recorded by the customer, and that's the reason his balance is going to be 75,000, 1,75,000. This is balance as per the our customer. That's a payable. Our books of account 2 lakh, and as per his books of account is 1,75,000. And why this 25,000 invoice is not recorded by our customer? So we are going to give the remark for that. Invoice raised but not recorded by customers. Annexure is there, which invoice exactly, we have the invoice number. Then we are going to send that invoice to customers. Hey, look, we have raised this invoice. This is the proof of this invoice. And this is not recorded in your books of account. So kindly record this. So he is going to do the further analysis, either that invoice is received or not, either that services is received or not. And if it's yes, then he is going to take the entry in the books of account. Then his balance also is going to be the match. If he is going to take the entry here, then his balance is going to increase from 175 to 2 lakh. Then both balance is going to be the match. If there is some dispute on that invoice and he is not accepted and he rejected that invoice, and that's a genuine, then we have to remove from our books of account. Then the balance is going to be the match 175, 175. But till the time no one is going to take the actions on that, the open items is going to be the remain as it is. So closure of the open item, that's also the important. So this is just an overview of reconciliations. So it means that anyone able to perform the reconciliations who have a basic idea about that. And it's just we have to match the same transactions in both the books. In one books, which transactions we have, same we have to match into another books of accounts as well. That's going to be the part of your reconciliations. क्या लगता है? इजी है?
हाँ सर।
बोलो।
जी सर।
तो उसमें कुछ भी कॉम्प्लिकेटेड है नहीं है, सिर्फ कंसेप्ट को समझो, क्या होता है, क्यों कर रहे हैं, इंटेंट क्या है, एंड ऑब्जेक्ट क्या है। एंड बहुत सिंप्लीफाइड वे में रिकंसलेशन की कंसेप्ट्स है, बट उसको बहुत कॉम्प्लिकेटेड वे में रखा हुआ है। रिकंसलेशन कहा तो डर लगता है, क्या होगा यार, कुछ तो गड़बड़ है इतना सारा। और उसमें इश्यूज क्यों हैं, गड़बड़ क्यों है और कॉम्प्लिकेशंस क्यों लगता है, क्योंकि उसको मैचिंग करना पड़ता है। एंड ट्रांजेक्शन्स अगर तुम्हारा 10,000 5,000 एंट्रीज पे चला जाता है, 2,000 3,000, तो तुमको डेटा देख के ही डर लगता है। अरे यार, 2,000 ट्रांजेक्शन लाइन आइटम्स है हमारे बुक्स में यहाँ पे, परचेस है, यहाँ पे डेबिट नोट है, क्रेडिट नोट है, डिस्काउंट है, पेमेंट है। एक ही तरीके का ट्रांजेक्शन है नहीं ना। तो उसके बुक्स में भी चेक करना, फिर कौन से ओपन है, रिकन्फर्म करना, डिस्कस करना। सो इट्स अ ह्यूज टास्क। इजी है, प्रोसेस ड्रिवन है, बट कॉम्प्लिकेटेड है। क्यों? वॉल्यूम की वजह से। तो इसलिए वो रिकंसलिएशंस को इंपॉर्टेंस देते हैं। बट लकीली R2R में वेंडर रिकंसलिएशन नहीं है, कस्टमर रिकंसलिएशन नहीं है। हमारे पास बैलेंस शीट रिकंसलिएशंस है, प्रीपेड एक्सपेंसेस, अक्रूड एक्सपेंसेस, ये सब के। और उसमें इतना कॉम्प्लेक्सिटी नहीं है। क्लोजिंग बैलेंस को शेड्यूल के साथ मैच करना, दैट्स इट। चलो, इट्स लेस देन 1 मिनट, जस्ट रिकनेक्ट।